right, good morning, everyone. Thanks again for joining us here, and thanks to our keynote speakers for getting us started today. I'm excited to kick off an inspiring day full of discussions with the three gentlemen I have joining me here. Next to me on my right is Chris Sutton, VP of Retail Automotive for J.D. Power. Chris and I have gotten to work pretty closely together over the past few months doing a research study together, and I know all of us here in this room depend very heavily on the work he does to understand the ever-changing consumer, so thanks for being here, Chris. Next to him is Frank McCleary, partner at Porsche Consulting, and Frank has had a hand in the development and success of the Porsche Drive program, and he also has worked with Dealerware and with plenty of other OEMs and tech vendors and partners in the industry to understand the size of the market opportunity for different mobility programs, rental at the dealership, and other great developments and innovations over his career. Thanks, Frank. And on the end, you already know Matt Carpenter, my boss, and an inspiring figure for me. I've been working for Dealerware for a little over 2 years, and still remember my first chat with Matt, being intimidated and then very excited about the ideas he shared with me. And so even though he leads a tech company here in Austin, he's a Detroit man through and through, as he explained about his first job at Ford, later worked with Audi of America, and now leads our team.
And, well, thank you. The second most relevant Matt at Dealerware, I assure you.
Matt Reynolds, is he in the crowd today?
Oh, third, I'm sorry. We got a couple of Matts down.
So before we dig into our discussion today, I just want to introduce a little QR code here. You can definitely use your phones to scan this. We're using these to facilitate Q&A. We also have a microphone down front here, so when we get to the end of the conversation, what I'll do is read any of the questions submitted through this form, a very simple online form, or feel free to walk up to the microphone and we'll sort of switch back and forth depending on what time we have. So to dig in, and I think we'll immediately kind of get to the skeptic's question about some of the ideas we saw in Thomas's presentation and heard from Matt this morning, is that we have seen record profits with lower sales and lower inventory. So do we need to change? The topic of this panel is, where's the money in mobility? Is change really needed? Chris, I'd love to start with you and hear what you've seen in the market based on consumer behaviors and what they're looking for today.
Yeah, thanks, Matt. I mean, for me, I look at it from a couple standpoints. The first is that I think from a position of strength, right, it's always better to invest from a position of profitability when we have the resources and investment to do that. So I think that's certainly part of it. Secondly, though, I look at it from the standpoint, and I thought Matt brought up some great points earlier of, look, if the industry is changing, then we certainly need to change, and it may be evolutionary, but we certainly need to do that. I think about it from the standpoint of, certainly as we have greater EV adoption into the marketplace, which I'll talk about in a little bit, I think it's going to have implications on the service department. And then, as we talked about in the prior session, I think there's a little bit of risk mitigation as well, right? Is with the idea of, as production ramps back up, do we think every manufacturer is going to have that discipline? And I would tell you, I come from a manufacturer background as well. I was with Ford, and similarly, it's like there is always a little bit of that perception that stock pressure creates and encourages volume. And if the idea that every manufacturer is going to behave consistently, that may not be the case, right? So part of this is a little bit of risk mitigation, that everyone won't, and that someone will put their hand in the air and say, I can grab a couple percentage points versus at share with all the implications we talked about. So I think it's a great time to change. And again, back from a position of strength where profitability is fantastic, it's a great time to invest and put into initiatives into the market.
Mm-hmm. Yeah, and Matt, I know obviously you're pretty optimistic about the change that we want to see in the market. How do you respond to that point that Chris makes, that this is about risk mitigation? You know, is this a defensive posture?
It doesn't have to be. I'll start maybe with the most practical response, and then it'll get a bit more meta. But first and foremost, mobility is very large, whether it's the transportation of goods or the transportation of people. We're in the movement of people business primarily. And one use case is car rental, and it is a giant market. 30 billion turnover, top line, in the US alone. Millions of cars, literally. And operationally speaking, OEMs, dealers, technology providers coming together, the operational pieces meet the technology pieces, and all of a sudden you're looking at an asset base of, like I said a little bit earlier, over 18,000 rooftops with priority vehicle manufacturing and production, allocation from the OEMs, with a very reliable last mile distribution network and experts that can take care of customers at scale. Service, sales in the future, I would argue, car rental. So the practical response is, why wouldn't we? Why would we let 3 firms with giant fleets service this customer? There are millions, millions, and millions of customers that are using our vehicles every single day and paying good money for it. So I would at least say, offensively, let's go after a real market opportunity that we already know. Now, does this start getting more strategic and a little bit more abstract, like vehicle subscription programs as an alternative to vehicle ownership? Absolutely it does, right? But at the end of the day, there are approximately 330 million vehicles in a country with 220 million licensed drivers. They're parked 96% of the time. There are going to be technology platforms and asset bases that come together that solve this problem. And that's before you get into what that all means to emissions, what that all means to consumer debt. But at the end of the day, the intersection of assets and technology is going to create more customer choice, including daily, weekly, monthly access to vehicles, large fleets of connected cars. So yes, we should prepare for that future, but even before we go there, let's just go put a straw in a very large drink.
Yeah, and Frank, from your experience with Porsche Drive, have you seen signals that, this is a good time to make that change, and that other OEMs are thinking about moving that direction?
Yeah, I think fundamentally it comes down to providing customers with choice, and being able to meet all their varying mobility needs. And if you look at OEMs as a whole and the disruption that Tesla created and the valuation that Tesla generates, all the OEMs are trying to, or most, I don't want to generalize, but most OEMs are trying to diversify their revenue streams to drive more enterprise value. They're looking at their overall market cap and they're saying, I can't just continue to build cars and sell cars and transact in a single transaction. I've got this entire customer base, I've got this entire dealer network that I leverage. I need to create more value out of it. And so leveraging mobility concepts, leveraging new retail concepts, leveraging connected vehicle services is all methods that OEMs are employing with dealers to diversify their revenue streams. And so mobility is one of those pieces where they can generate additional value and meet those customer needs, because again, a customer with Porsche Drive, it was really about flexibility, and the impetus of that was seeing that Clutch was being successful with having Porsches in their fleet. They had Jeeps, they had Toyotas, they had BMWs, and people were picking up Porsches, and that was one of the more highly asked for vehicles. BMW tried it, Mercedes tried it as well with differing success. But again, I think there is a customer set that needs that flexibility, just like a lot of the retail providers now provide flexibility in financing. Customers also expect ability to have flexibility in ownership periods, whether it's daily, weekly, monthly, and then to a next level, providing that flexibility in the vehicle that they drive, and not being stuck with the one car or one vehicle on a weekly basis. So if, in Matt's case, where he said he's a one vehicle family, if he and his wife want to take John through, I don't know what, I'm out in Michigan, so I don't know what else is near Ann Arbor, but somewhere nice, and you need a convertible. Driving, I don't know what you're driving right now, but most likely a Audi or
Q7.
Q7. Maybe downsize to a nice 911. That would be nice, right?
Yeah. Downsize is relative to not only size.
Right. Okay. But
price is a thing too.
Well, flexible subscription.
There you go.
There you go. So that's really where we saw the demand, and finding that customer set that is looking for that flexibility. And something else that we learned through that program was that it wasn't necessarily the flexibility of all the different models, but really the flexibility in ownership and the flexibility in not having to be tied to a three-year lease or 6-year ownership cycle.
Mm-hmm. Yeah, I love the way you frame that in terms of getting to our or serving varying mobility needs from the customers, because I think that there's a gap. We have a bit of a robo-taxi problem with mobility, and I know mobility can be a bad word, but consumers really think about mobility as meaning robo-taxis, and we've heard this word, this promise for nearly a decade now. I think I've been tracking some of the articles poking fun at that, but we kind of need to change that narrative in retail, and I wonder what the retailer's role in delivering to flexible, varying needs is, and how we start to introduce new services, change that story around mobility is not autonomy. Matt, you have thoughts on this?
So I will try to reserve my obvious bias here, for sure. But objectively, I think mobility products and services not only represent customer choice and an alternative to how we all move around and how we consume mobility, but also additive to the ownership experience. And here's the retailer's advantage, right? The retailer already owns this relationship with the customer, sales and service. They already have a built-in manufacturing pipeline that source them with vehicles. And they can offer a more holistic personal mobility solution than and I love all these brands, Turo, which is just peer-to-peer, Uber, which is just app-based ride-sharing, Enterprise, Hertz, Avis. These single solutions predominantly service one narrow lane use case. Some of them are very long, right? Car rental is a giant market, but for the most part, it's a restricted offering. Daily increment, weekly increment, monthly increment. The beauty of offering mobility services through a retailer network that's already in all of these markets and communities is you can position it as an alternative to vehicle ownership in the traditional sense, or additive and on demand. Because the reality of the household equation is we all need a different fractional solution for personal mobility. Some of us need 0.8 cars, 1.4, 2.7, but the traditional way that this industry has gone to market has pressured all of our consumers to round up. So you could get away with 2 cars, but you know what? We're going to go with 3. You probably get away with 1 car, like my family does. Let's go with 2. Additive mobility services through an established distribution network that also conveniently owns retail sales and service. Now all of a sudden we can actually consume 1.4 vehicles, or 2.7, or 0.8. And we can use technology to help us get there. So the cars, will they drive themselves? Not to dodge the original question. I think that's a feature that comes later, frankly, in at least large-scale commercial application. And I do think that our retailers today, which I'll continue to make the case, are our mobility distributors and centers of the future, can still play a role in those vehicles. The service of those vehicles, the staging of those vehicles, the marshaling of vehicles that are traveling different geographies based on this huge problem to solve in the future, like load balancing supply and demand, as travel patterns shape in different parts of the country and different parts of the world. So there's a lot of things that are in front of us in regards to an autonomous future that I would argue the retailers will play an important role in.
When we look backwards at like the 2010s, when subscription programs didn't necessarily take off, there was a lot of experimentation. Frank, what do you think has changed between then and now, and the way that we're introducing these programs today?
Yeah, I think if I look back the 2010s, 2015, 16, 17, I think everybody was trying. But if I look at the retail network, it was very skeptical. Okay, let the OEM try, let the OEM throw in some money into Uber or Get or Lyft, and let's see how things play out. But I'm still going to stick to my traditional, punching a ticket retail approach. And so I think as OEMs have had some headway and some success, and leveraging that connection back to the retail network, and leveraging the retail network, as Matt so eloquently highlighted, to be able to push that forward and expand, it's now changing the way that we look at things, and there's a momentum that's been growing and pushing that forward to be able to say that this does work. We can generate revenue. We can we can be profitable at it. And I don't want to throw everything at let's say the COVID excuse that COVID has changed everything, but in this case, COVID has changed things. I mean, if we look at the shift in the labor population and labor pool, and I mean, some of you may be facing labor shortages because people don't want to do the job anymore. They want to live from anywhere. They want to work from home. And that also changes the mobility needs. And so then you start looking at your household, and I don't have to drive to work anymore. Why do I need 2 cars? I can go down to 1. And so that then is starting to shift the consumer behaviors and wanting to have more flexibility and wanting to have more options in in their choice or in their selections.
Yeah, I mean, for me, agree with the point of retailers have the history, they have the relationships, they know their local market, right? It's a tremendous advantage. I think, especially when I think pre and current situation, certainly the convenience-driven digital tools that retailers have at their disposal, right, is better. Their facility with those is better. But when I think about what's the retailer's role in changing that narrative, it is really kind of continuing to drive digital. It is continuing to provide customers that better experience. We conduct our annual SSI study. It measures the customer purchase experience. And we found close to 60% of customers are doing at least something digitally, right? Something more than just finding the vehicle online. And so that was encouraging. The part that wasn't encouraging is when we looked at how much customers' time was being saved by doing that, it was none, right? So the difference between customers going online, conducting all these digital activities, and then coming into the store, they weren't saving any time at all. So I think the best way to show retailer strength in that area is just help customers save time, meet this promise of convenience that customers clearly want.
We need that skip intro button from Netflix for getting into these things, yeah.
Well, and again, I mean, you can't run this from a headquarters in Plano or Dearborn or wherever. I mean, at the end of the day, the rooftops are the ones that have that, that last mile point of contact with the customer, and they have those relationships. Digital maybe creates a separation to a certain extent, but at the end of the day, people still want customer and interaction with someone. They want to see someone transact at a certain level, and so there's still a need and a desire that the individual retailers can provide and can leverage and can drive forward.
Yeah, I mean to build on that point, even the customers that transacted mostly digitally, that indicated that they want to buy online, 80% of those customers still said they valued the role of the sales consultant, right? So it's really digital to help facilitate and further that relationship between dealer and customer. It's not to create a barrier, it's to help strengthen it.
Yeah, well, and I heard something interesting from you, Frank, and really ties into our next question about how the relationship between the OEMs and their retail networks change as mobility programs gain some market share. Thinking about the Porsche Drive program success, you mentioned that people want that sales experience in the stores, but do they go between the sales experience of subscription and a traditional lease and sale?
I don't know if everybody loves the sales experience per se. That's maybe why digital is being requested more and more. But I think it's that connection to the dealership and again, having the local presence and the convenience more so than anything else. I mean, the footprint alone enables a national network to be deployed at scale relatively quickly. And no OEM is going to, I mean, Matt, you mentioned Starbucks and McDonald's having 12 and 14,000, I mean, there's no OEM that's going to set up any sort of footprint in North America at least, because they're spending all their money on EVs right now, or autonomous, depending on which OEM you talk to. So again, it's leveraging that retail network that exists to be able to scale at a more efficient pace, because the Ubers, the Lyfts, the other providers of different continuums of the mobility service can scale relatively quickly because they just add more drivers to their programs. And so being able to have that that footprint enables an OEM to scale relatively quickly, as long as their franchise network is willing and able to to adopt and accept and take it forward.
Yeah. How does that change as EVs come in? Is the opportunity the same to, say, roll out EVs and get adoption with EVs through simultaneous adoption of subscription mobility programs?
Yeah, I mean, with subscription, you enable it, again, from daily to monthly to yearly, depending on the program. And so customers that are not willing to necessarily invest in a 3-year lease or retail purchase, you can leverage EVs to essentially try. And I mean, back in CES 2019, I was listening to a panel discussion, and really the discussion was subscription. And many retailers were saying, I think Don Flo may have been the one saying it, it's just an avenue for extended test drive into a retail transaction. And so it enables, again, skeptic customers that don't understand, don't know what EVs are, to interact with dealers, no pressure transaction, and try it out for a week, try it out for a month, try it out for a day, whatever that continuum of ownership duration or use duration, to be able to see if they do like it, do not like it, because again, you're able to test out or have that flexibility, as I was joking with Matt about his 911 that he's going to take his wife with. He doesn't know that yet, but.
I mean, also we have to work on your elevator speech when you talk about Ann Arbor, and then maybe we can talk about a 911.
I stay on the the Detroit side of things.
Speaking of Detroit, so this is where I'm actually quite proud, this question, of our history. Maybe a little bit more proud of the what than the how, but where I'm proud of being part of this industry is that it's not vertically integrated, but it works and has worked. The OEMs and the dealers, for over a century, have built up this distribution network that distributes 17 million vehicles a year and hundreds of millions of warranty repairs. And back when leasing in the 90s was a new and early thing, nobody knew how that was going to go. And branded insurance products, like how are we going to bring this to market? I mean, all of the things that consumers value and pay for, the what, the how we got to get better at. And we're starting to get more digital, we're starting to get more integrated, we're starting to get to the better on the how. But just like vehicle sales at national scale, service in and outside of warranty, leasing and financing, branded insurance, like high value propositions, all of these things for consumers, OEMs and dealers for more than a century worked together to scale, to make this industry one of the biggest and most emotional that the world has ever seen. I don't see how it's that much different with mobility. It's the same relationship between manufacturing and distribution. The OEMs have these coveted brands that have immediate market awareness. They have the scale and the resources to do tier 1 marketing and stand up digital platforms that people pay attention to. Dealers service millions, hundreds of millions of customers in thousands of zip codes and communities every single day. And it works. I mean, I've run a car rental business for a few years, and it's hard, believe me, but it's not that hard. The OEMs and the dealers can work together. But the car rental use case, which is only a segment of mobility, it's a good precedent to start with to figure out how to do these things together. So I see less friction, not more. And you're going to see less agnostic, kind of obscure, OEM-backed mobility brands as companies going forward. You're going to see more products, because more and more OEMs that we work with every day that I speak with every day are betting on the dealers to be last mile for these branded mobility products of the future. That's what makes me proud. We will figure it out, and technology will help us.
Yeah, I certainly think as well that it is in the best interest of the manufacturer that they have as profitable of a dealer network as possible, right? And when we talk about the advent of EVs, and we'll talk about it a little bit, the implications on the service department and potential risk there again, where if we might have service business, what is it that we have to replace that again? I think some of these new mobility alternatives are ways that the dealer manufacturer can work together again to kind of safeguard dealer profitability, because again, dealer profitability means best staff, best resources to take care of their customers, right? A retailer network that is struggling with profitability, which is certainly not the case right now, again, is going to struggle to attract talent to take care of those customers.
Mm-hmm. Yeah.
And the money is there. I mean, that's the other thing that sometimes we hesitate talking about. Hertz, publicly traded company, so all this is available. $70 a day on average across hundreds of thousands of cars. That's their daily weighted average rental pricing per day. And they have a wide church of cars, right? They have entry level, they go all the way up to premium SUV. And they're still 30 days in a month. So you multiply 70 by 30, you're right around $2,000 per month for an asset. Same industry, will lease that vehicle, again, on a 3-year installment contract. So there's a little bit of a timing gap in the comparison to unpack for $550 per month. So over here is an asset generating, in this use case, over $2,000 in revenue per month. And over here, you can lease it for an extended period of time at $550 per month. There is a very wide middle to figure out. Yeah, this use case has got a little bit more cost in it, but not $1,500 a month. There's enough to go around. And there's a lot of folks in this room that actually know a lot about this, even more so than me, and are already doing it. So it's going to happen. It's just who's going to be the tip of the spear. So of course, this is a distinguished group that we believe are going to be the innovators of the future.
Yeah, that may answer our next question right away. What's the real opportunity? But I'm interested to hear, that Hertz example is great, but have you seen it in personal experience, without naming any names, but I think you've probably got some experience to draw from on the impact that flexible access to monthly, weekly, daily rentals can have.
Yeah, we work with partners that generate 7 figures annually on modest-sized fleets of vehicles. And, net profit, high 6 figures, right? We're going to keep things somewhat safe and anonymous, but not all companies are public. But yeah, we have customers that leverage our technology to bring this to life that are generating millions and making hundreds of thousands already. And this is before the brave new day of the more extended, more flexible weekly and monthly use cases. Some of that exists, but it's mostly daily rental right now. And it's general market and it's premium, coast to coast, and the square states in the middle. This is already happening. There just aren't so many folks doing it yet, and I believe that point of inflection is here.
Yeah, and I think technology just enables that. I mean, if we boil it down to what Uber does, right? Uber essentially hails a cab for you. It's just significantly higher volume. But it enables that seamless transaction. And so with rental, I think you were mentioning it, going through the airport and trying to get a car and everything else. I mean, sometimes it's frictionless, sometimes it's not so frictionless. So enabling that, provides that seamless transaction that a customer is now getting used to having. As Thomas alluded to, the transaction sort of ends at, where's my QR code? And now I take a screenshot or a piece of paper to the dealership. And so that's where the opportunity starts to grow. And there's even beyond that. I mean, we started to scratch the surface on collision and rentals after in the insurance space. And I mean, that's a whole nother Pandora's box to try and unravel, but it's very highly concentrated. And which customer does not want to have their same branded vehicle? They go take it to the shop, get it repaired, and what, they have to go to a rental shop to get another car that may be similar, may not. I mean, we're essentially letting the customer walk out the door and try something else. And then they say, oh, you know what, I like that car better. I'll trade this in, I'll go to the other dealership, and I'll get this one. And so that's where the opportunity sort of lies to also create a closed loop environment where we're trying to recapture and we're trying to keep that customer in the brand, in the vehicles that we sell, and not letting them have those opportunities to walk out the door and try something else.
Yeah, and Chris, I want to ask you, is the demand there? And I think Chris and I have been working recently on a white paper that'll be available soon from Dealerware, not to plug too hard. But we saw some really interesting signals in what people are already doing for rentals and where they can access those. And can you talk a little bit about what you think the current demand is for this type of program?
Yeah, again, I mean, Matt, to your point, we tested a variety of different mobility alternatives and to get customer feedback and interest in these different pieces. And we looked at it from premium, non-premium, mass market customer standpoint. And it was interesting, and maybe one that I wouldn't have expected, but the customer interest in dealers as a rental choice was fairly strong, right? And I think we look at it not only strength of the customer interest, but also we tested what customers thought they would pay. And there was pretty good alignment there between, again, what they thought they would pay and actually would have to pay. And I also look at it from the nature of competition, right? So, if I'm a dealer, I want to get in this space, who's my competition? I would argue that for frequent travelers, the airport rental experience to me is pretty darn good, right? It's like I can get off the plane, get into that rental area, and in a lot of cases in a minute or less, and I have a car and I'm on my way. But for most customers, they don't live that close to the airport, right? That's kind of the nature of them. It's like they have a big footprint, you don't live that close to them. And the competition may be the branded off-rental, local rental market. And I would argue that the experience in that case is usually, honestly, I mean, I think it's a opinion of one, but I find that experience kind of atrocious, honestly, right? It's like the vehicle, you get there, the vehicle isn't there. A lot of times there isn't urgency to get the vehicle once it's there to get it clean. So I think from a dealer standpoint, it's like, look, if that's what I'm competing with, it's like I think I have the opportunity to be a lot more convenient than that. So. Yeah.
Well, I want to turn to Q&A here in a minute, but before we do, I've had this question burning in my mind. I've been walking around Austin a lot as we've been preparing for this event, and you see scooters everywhere, bicycles with graffiti on them. We have Cat Metro, which is not the most used line of transit in the city. So I'm curious for a quick answer from each of you. What can our audience here today take away from the huge diversity of mobility options and the way that people use them here in Austin?
Use hand sanitizer after you get off the scooters. That's the only wisdom I have for you, Matthew. No, it's cool. I mean, it's another option in the consumer toolbox. So micromobility and short trips, I would say, is definitely interesting problem and solution space. I don't know how their economics look. I think I have some theories that are probably not wrong. But I like the fact that in this city, our hometown, there are smart people with a lot of resources working to solve micromobility and last mile type personal mobility challenges. But yeah, hand sanitizer, people.
I choose my mobility needs based on the drivers around me, and depending on the city, maybe not scooters. Yeah, the hand sanitizer is a good point, but I'm not as big of a germaphobe, so it's like, move on.
Well, I think it's interesting, Frank, in our last question, you said Uber hails a cab for you, but it also books you a bike and a scooter, and that delivering to the choice that the customer wants to make, I think is an interesting case study from Uber there.
Yeah, it's because we do a lot of work in Europe as well. The multimodal transportation is significantly a bigger play in the European market, just because if you look at an end-to-end point A to point B movement of an individual to work or wherever it may be, there tends to be more than one modality of transportation In the US, it's typically you get in your car, you drive to point B and get out, you're done. In major urban areas or metro areas, you do have that multimodal where it comes into play a little bit more, and that's where, you know, being able to, you know, you get into your scooter and then you take Uber and then you get the scooter through the park and blah, blah, blah. That's where you get that use case. I think they're just looking at expanding the service offering and competing against everybody else.
Yeah, I mean, to me, it was, you know, I took an Uber in from the airport, and I was really kind of struck by operationally just how dialed in it was, right? From the time that I got to the airport, I thought that from the airport, I thought the signage to get to the location was fantastic. It also made me cognizant of just how dependent on the technology we are. When I was in the parking garage, I'd lost connectivity, so I couldn't access the app to call the car, which I was kind of freaking out about. It's like, you have to walk all the way back in here and do this. And then finally, it was once I was in the car, it was still that personal touch, right? Where the driver had access to the cords that I could charge my phone, ask what I wanted to listen to on the radio, which I didn't care. But, you know, it was not only the technology, but that it also kind of enabled that connection. And even in a place like Austin that continues to grow, it's you know, not only these mobility alternatives, but still like a really robust system of like trails, parks, and other things that I think enable that I think is really fantastic. So,
Well, I definitely like the hand sanitizer tip too. I've been riding every of the two-wheeled types of mobility. So with that, I do want to open up for Q&A, and like I said at the beginning, there is a microphone in the center of the floor here, and I'll just jump into our form. Thank you guys for using this. It's, you know, always fun to use something that enables customer choice. Not to be too heavy-handed with that reference too, but
Smart guy.
First one we have here is. This is a great question. How can a dealer start or expand rental car mobility or subscription service when we have inventory constraints? And I don't believe we have a name submitted with that, but anonymous.
So the easy button to this is Lori Tennant. Call Lori Tennant on the Dealerware team. You will be sold within 2 minutes. There are people that can help. It's not just technology, it's also experience with a variety of different partners of different sizes that represent different OEM brands, different fleet sizes. And it can be very much crawl, walk, run, right? And I wouldn't look at the opportunity strictly from the lens of this discussion, which is largely how do we use our asset base and enabling technology to tap revenue and profit pools. There's a lot of residual goodness in managing efficiently a connected fleet of vehicles that actually enhances our core business of sales and service. We all know that loaners can be, as an example, a bottleneck for service appointments, right? And sometimes those ROs escape the franchise system to non-franchise dealerships or repair shops, frankly, because we couldn't get the customer a replacement vehicle fast enough on their timeline. Right, so you can learn a lot about fleet management first in the context of use cases that you know, like a loaner contract and putting service customers in alternative transportation, and learn and grow into revenue enablement, and then maybe something down the road like sophisticated fulfillment of OEM branded vehicle subscription programs. But you don't have to go all the way to the end because there's all this residual goodness of just deploying a fleet of cars that are connected with smart technology and people that know how to leverage the technology on site. And one of those providers is going to buy y'all dinner tonight, so there's going to be plenty of people to talk to.
I want to jump to another question. I also have one here for each of you, so hopefully we have time for that. I see we've just got about 5 minutes left. We'll try to be mindful so everyone can get a break between sessions. But I find this interesting. How do you see subscription services working hand in hand with service rentals to ensure availability for service customers?
Utilization. I mean, like Matt said, having a flexible fleet that can service both use cases. At the end of the day, I look at mobility as a continuum of usage of product or vehicle, right? From hourly, daily to monthly. And those that are successful have that ability to balance that fleet to what Matt just alluded to be able to leverage them across those different use cases. And that car could be a subscription product one day and utilized for a subscription product, and then you may proactively ask the customer to switch the car to something else so that you can use it for some, for a different use case. And so it's creating that flexibility and utilization.
Yeah, the business logic needs to be determined by the fleet operator based on the needs of the customer. But what Frank is articulating, rightly so, is there's a world with connected car technology and connected fleets where you have multiple demand flows and booking flows into the same fleet of cars, right? You have a service department that is going to ask for loaners to assign to service customers because their cars are going to be in the shop. And then maybe on your dealership website or dealer group website, you have kind of a rental offering, daily rental offering. So you're going to get booking flow from your dealer properties, online properties. And then in the future, more and more of our OEM partners are going to stand up kind of integrated one app digital strategies that will allow a vehicle to be booked at a dealership from a new booking flow that's coming in through an OEM app. So technology will govern this over time, right? You're going to have to always decide who eats first at the buffet line, right? So like, does the service appointment and scheduling process from the advisors and the fleet manager of the service department, do those always take priority? How do we treat the daily rental requests that come in versus all of our third-party bookings that come in? This is the beauty of modern technology. It can be done once we work together to fix the business logic. But this is one of the more difficult problem spaces, because once you have a connected fleet of vehicles made available to people that can use them and find value in using them, a lot of people are going to try to get one. And we're going to have to decide how to prioritize the booking.
Well, to wrap it up, I think this is a really great wrap-up question. What does the future of mobility look like to each of you? And I think if I can add to the question we got here, give us a short-term and then long-term pie-in-the-sky kind of idea. You want to run us down?
Yeah, I'll start. I do think that, when I think about the near term and short term, to me, almost like the loaner fleet is the building block, right? It's like, I don't think I consider a retailer for these other areas until I have loaners as my building block that I can expand from. And I thought, I also think that a lot of the emphasis around subscription has been based on this very fixed, well, here's the monthly fee. And I think Frank really articulated it nicely, as it's like, it doesn't need to look like that. It can be like this more interim term. And I think, to me, that's where a lot of the future is, because I think that's what the customers want. I think they want flexibility in this kind of rigid monthly. That's not where it's at, I don't think. So.
Yeah, I mean, again, it's really that flexibility that the customer, just like, when you go through the F&I desk and what's their credit score, what kind of pricing can you afford, and what's your monthly payment? Can you, is it a retail transaction, is it a lease, is it something else? I mean, continuing to build upon that and providing that mobility service to, that mobility offering to customers. I think long term, I hate to say it, there's so much money being poured in that autonomy and robotaxis will come at some point. What those projections are, GM announced $50 billion in revenue with Cruise by 2030. They don't put it in investor presentations for the sake of just throwing out numbers. So, and knowing GM's footprint, they're North America focused. So that's a big projection. Other OEMs are also putting their foot in the water and going aggressive. So I think robotaxis are coming. Will it significantly impact the ownership experience or ownership share? I think it's just going to eat into Uber and Lyft and the taxi market's already revenue pools.
Yeah, a couple of quick things on this as we wrap up. So approximately 5% of U.S. passenger miles traveled are traveled in a vehicle that the passenger doesn't own or the family doesn't own. Our collective share OEMs, dealers, technology partners working together to drive that share up at this point of inflection where that 5% could look like 20% in the next 5 to 10 years. I would love to think that we can work together to box out some of the other mobility players. So that's tactical, like how do we go to market with the right products and how do we capture share. Long term, and I'll revert back to something I said earlier, 330 million cars, 220 million licensed drivers, lots of emissions, lots of traffic and congestion in cities, lots of household debt associated specifically with auto loans and leases. Now, fewer cars may be scary, especially when you grew up in a factory town like I did. But I am here to suggest that the economics for all of us are actually better because we're capturing share that's escaping our ecosystem today, but also because we're bringing more value. With more value comes more economics. When you give customers flexibility, a modern experience, time and choice, they will pay. And that's what we're seeing in the market today. It's still early innings, but I think we can have together, those in this room and our friends around us, can have meaningful market penetration of daily, weekly, monthly mobility, and at the same time, less households straddled with fewer leases and loans, less cars in cities, and less than 40% of our cities dedicated for roadways and parking. So it's a little bit aspirational at the end, but we have a break next, so I figured I'd leave you with that.